Do you want to invest on your kids' future or college education but don't know where to start? In this video, I will share you 5 options on how you can invest for your kids' future and college education. Stay at the end of the video and I will share with you the options that we picked based on our plan for our kids' money. Hello everyone, my name is Hero and welcome to my channel, Financialero. So in this channel, you will learn about personal finance, travel hacking using credit card rewards, and valuing relationships. Here are the 5 different options that you can invest for your kids. I say invest, not save, because time and compound interest is the most valuable asset that they have. Number 1 is custodial Roth IRA. If you are familiar with the Roth IRA, somehow you already have a basic understanding of the custodial Roth IRA. You invest after tax money, but when you withdraw, it's all tax-free, including the growth. The only thing is, for you to be eligible for the custodial Roth IRA, they have to have an earned income, or if they have a part-time job like babysitting or mowing the lawn, etc. And since it's a custodial account, the parents manages the account until the kids reaches the age 18 to 21 years old. Number 2 is the 529 Educational Savings Plan. Everyone is eligible to contribute on this plan, especially if you're planning for your kids' college expenses. There are 2 types of 529 plans. Number 1 is the Educational Savings Plan. This is where you can invest the money and let it grow. There are some tax advantages on this account because all withdrawals will be tax-free if it's used for qualified educational expense. Number 2 is prepaid tuition plan. This is where you buy college credit for the future in today's price. So basically, you are locking in the rates right now. So the example here in our state is the Texas Tuition Promise Fund. Just so you know, the average annual college tuition inflation is now at 8%. So it's either to invest your money or buy college tuition credit for you to lock it in. So between the 2 options of the 529 plan, you just have to ask yourself 2 things. If you want a guaranteed return of your money at 8%, then you go to the prepaid fund because you're locking in the rates right now. On the other hand, if you are okay with the risk, or if you wanted to invest the money for possible higher returns, tax-free growth and withdrawal if used on qualified educational expense, then pick the 529 plan. Depending on the state where you live, contributions might be tax deductible or you might be eligible for tax credit on your state income tax return. Number 3 is the Coverdell Educational Savings Account or ESA. It is also for college education. All contributions grow tax-free and withdrawals are also tax-free if used on qualified educational expense. It is almost similar as your 529 plan, but the only difference is you can only contribute $2,000 per year per beneficiary. Number 4 is UGMA and UTMA trust accounts. UGMA stands for Uniform Gift to Minors Act, and then the UTMA stands for Uniform Transfer to Minors Act. So these are types of custodial trust accounts. Since these are custodial accounts, the parent, the guardian, and the relatives manages and controls the account to benefit the minor. These types of account have more flexibility than your 529 and ESA account because the minor can use it anywhere else aside from education. And once your child is considered as an adult, you don't have control of the money anymore and your child can use it anywhere they want. And for us, that's one of our hesitation on opening this account. And lastly, for number 5, opening a brokerage account under your name. This is when you wanted to have control of the money that you are saving for your kids' future. There is no tax advantage on this account, but there are a lot of flexibility since you can teach your kids about investing while they're growing up. Maybe you wanted to give them this money to buy their first car, put a down payment on their house, or to start a business. Just keep in mind that anytime you sell an investment at a profit in this account will incur capital gain taxes. And since it's under your name, you are likely to pay a higher tax rate. I know it's kind of confusing, but let me simplify it for you. Ask yourself 2 questions. Is it for their college Is it for their future not related to college expense, or maybe both? So if you're saving for college education, you can pick between the 529 plan or the ESA accounts. And for us, we picked the 529 plan due to contribution limitation. Remember, the ESA, you could only contribute $2,000 per year. Both of them have tax advantages anyway if you use it for education. And if you're planning to invest for the future, not related for their college expense, you have the custodial Roth IRA, but you know already that they have to have an earned income. You have UGMA, UTMA, or opening your own brokerage account. So for us, our kids have their own money from the monetary gifts that we received since they were born, from their birthdays and Christmas gifts. We chose to open a brokerage account under our name so we have more control of the money as compared to the UGMA and UTMA, where the kids have full control of the custodial account once they reach the adult age, and then they can spend the money wherever they wanted to. So there you have it. I hope you can finally decide on which accounts you wanted to offer based on your goals for your child. Again, we picked the 529 plan for our kids' college education, and we chose to open a brokerage account under our name to invest our kids' money and planning to give it to them in the future. If you find value in this video, please click the like and subscribe button and appreciate your help. Thank you.